U.S. Treasury insider confirms emergency IQD rate push before Sunday RV alert 2025. Iraqi Dinar, with an intro for your channel RV News written in paragraph format and without headings. Welcome back to RV News, your go-to source for the latest intel, rumors and confirmations about the revaluation of the Iraqi Dinar, the Vietnamese dong, and other global currencies reshaping the future financial system. If you've been following the ongoing developments in the global currency, reset GCR and the much-anticipated RV, then today's news is something you absolutely cannot ignore. We've just received a powerful and potentially game-changing update. A U.S. Treasury insider has confirmed an emergency rate push for the Iraqi Dinar IQD, and it is reportedly scheduled to occur before this coming Sunday. That's right, this is not just speculation anymore. We now have credible, inside-sourced information suggesting that things are escalating faster than even the most optimistic analysts anticipated. Now, let's break down exactly what this means and how it could impact every IQD holder across the globe. According to sources close to the U.S. Treasury, discussions that were once considered preparatory have now turned into full-blown implementation mode. In simple terms, officials in the U.S. Treasury Department, especially those working within international monetary policy and currency exchange operations, have been working tirelessly in coordination with the Central Bank of Iraq (CBI), the IMF, and other key global financial institutions to initiate a final emergency rate adjustment that would catapult the dinar from its suppressed program rate to a real-world asset-backed exchange rate. The insider, whose identity remains protected for obvious reasons, explained that the urgency behind this move stems from several converging factors. First and foremost, Iraq's internal economic stability has finally reached a tipping point of strength, especially after recent reforms implemented by Prime Minister Mohammed Shia al-Sudani, with the strengthening of oil exports, the reduction of corruption through AI-based blockchain finance protocols, and the successful integration of Iraq's banking system with the international SWIFT payment network. The timing is now ideal for the country to reintroduce a stronger, internationally accepted dinar. This emergency rate push is being described as a sovereign liquidity stabilization strategy, and it's meant to prevent what the insider called a cross-border economic leakage that could destabilize the tightly managed balance between Eastern and Western financial zones. In plainer terms, what this means is the global financial elites, in cooperation with central banks and governments, are preparing to move liquidity into safer asset-backed positions, and the revaluation of the Iraqi dinar is a core part of this strategy. In fact, documents leaked to RV News indicate that the IQD has already been assigned a placeholder rate in internal banking systems, visible only to certain levels of clearance at Tier 1 institutions. So, what is this placeholder rate? While no official number has been released publicly, our team has received reports that Tier 1 and Tier 2 banks in the United States have already begun internal simulations with an IQD value between $3.71 and $4.25. USD per dinar. This aligns closely with what we've been hearing from our overseas contacts in Dubai, Zurich, and even Kuwait, where some private exchanges have already started engaging in test exchanges for select clients, mostly governments, oil companies, and elite families tied to historical asset redemption programs. But here's where things get even more interesting. The Treasury insider clarified that this emergency push is not merely a reaction to Iraq's internal progress. It's also a strategic necessity as the United States seeks to protect the petrodollar, strengthen its leverage against BRICS expansion, and stabilize inflationary pressure domestically. The revaluation of the dinar, backed by Iraq's massive reserves of oil and gold, allows the U.S. to offset weaknesses in the fiat system by bolstering digital asset conversions and precious metal-backed instruments. This explains why, to the same source, the Federal Reserve and U.S. Treasury have been quietly ramping up technical infrastructure to support high-volume conversions of IQD into USD, especially through high-security redemption centers located in Texas, Florida, Nevada, and parts of the Pacific Northwest. These facilities are said to be on standby for Tier 4B activation, with a green light expected between Friday night and early Sunday morning. That gives us just a narrow 48-hour window to watch for the official trigger. Additionally, multiple dinar community leaders and currency analysts have observed strange banking activity in recent days. Some account holders reported seeing temporary currency placeholders show up on their online banking dashboards. These were quickly removed, but not before screenshots circulated showing IQD codes next to USD balances. Moreover, Wells Fargo, Chase, and Bank of America branches have all confirmed receiving updated currency redemption training materials for staff, which include detailed instructions on how to handle newly revalued currencies with a special focus on the dinar and dong. So why the rush? Why is the U.S. Treasury pushing this now so urgently before Sunday? According to our insider, this is all tied to a larger geopolitical event that's expected to unfold within the next 7 days. While the exact nature of that event remains classified, what we do know is this: international trade settlement protocols are being restructured as we speak, and countries that do not align with the new financial transparency standards regarding commodity-backed settlements risk being cut off from SWIFT or forced into de-dollarized trade alliances. The IQD revaluation, therefore, is more than just a monetary adjustment. It is a geostrategic lever, a domino in a larger game that affects energy markets, sovereign debt restructuring, and digital asset convergence. Iraq, by activating a globally respected rate for its dinar, will instantly re-enter the global economic stage not as a war-torn relic, but as a stable partner in the new financial order. What does this mean for dinar holders? It means time is of the essence. If you're holding IQD, you may soon have an unprecedented opportunity to convert it at a rate significantly higher than what's been available since the early 2000s, but that opportunity may also come with strings. Attached redemption centers will likely require NDA agreements, verified provenance of your currency receipts, certificates of authenticity, and compliance with the U.S. Treasury's KYC AML protocols. There may also be a limited redemption window, with Tier 4B exchanges possibly lasting only 10 to 14 days before the public rate is made available at a lower level. The insider also warned that certain disinformation campaigns have been deployed to confuse or dissuade dinar holders from acting. Misinformation websites and social media accounts are actively spreading the notion that the RV is delayed indefinitely, or that the dinar will float slowly over years. This is false. The emergency rate push is meant to bypass that gradual float and instead introduce a managed, asset-pegged rate directly into international Forex platforms. That's why it's critical for dinar holders to stay informed, alert, and in touch with trusted intel sources. In terms of timing, the push is said to be linked to the Forex reset window, which typically occurs from Friday night through early Sunday morning. That's when global currency markets undergo maintenance and restructuring, allowing for silent rate adjustments before trading resumes in Asia-Pacific regions. Our insider claims that the new IQD rate has already been entered into the IMF centralized banking ledger, but access to that rate will be limited to high-security nodes until a global release command is issued. That command could come anytime between Friday 11:59 p.m. EST and Sunday 6 a.m. EST. The markets will not react visibly right away. This is a controlled rollout, not a media event. But redemption centers, select Tier 1 banks, and pre-authorized clients will receive early access under strict NDAs. Following that phase, the public will likely see the rate hit Forex boards within 48 to 72 hours. That's why this weekend is so important. It could be your only window to act at the highest possible rate before the broader release compresses the spread and narrows your leverage. We also want to address a few frequently asked questions we've been receiving. First, is this push connected to the U.S. elections or political motivations? The answer appears to be yes, but not in the way most think. While the RV itself is a financial process, its timing is absolutely influenced by global and domestic political considerations. A sudden boost in liquidity from RV conversions could strengthen U.S. consumer confidence and allow the Treasury to offset certain debt obligations, giving the current administration a huge economic talking point. Alternatively, it may also serve as leverage for international negotiations, particularly as BRICS prepares for its October expansion meeting. Second question, will there be tax implications? Almost certainly. The U.S. Treasury is expected to classify IQD conversions as a capital gains event, and you may need to file under specific forms, especially if you convert more than $10,000 at once. That said, some redemption packages may include incentives or tax-deferred structures, but these will only be available to those who go through approved exchange channels, not black market deals or unauthorized brokers. So where does this leave us now? Quite frankly, on the edge of financial history.